welcome to today's video, which is called Black Monday had been called off. I had been clear in expecting no flash similar to Friday and actually some kind of a lower knot on the daily developing. And thanks to the fake news about 90-day tariff delay, that's exactly what we got, but let's go piece by piece. You have reviewed Saturday's extensive video where I featured this chart and market breadth, learnings, implications, clues, hints, however you call it, as to what to expect. So what has changed based on Monday's closing price and Monday's positioning across the board, across various periods of moving averages? You be the judge. The chart is very clear as to what to expect next. Hourly chart. Right when the sizable long lower knot had been in there and partially being retraced, I had given the call to all clients, whether swing or intraday, via Telegram, via their premium channels, that this is a good buying opportunity to develop. And first we got the measured EU response about ready to go 0 for 0 tariffs, and then we got that fake news about 90-day tariff delay, which fostered a very steep ascent, and near the very top I had issued the call to get out, lock in open gains. And as the prices had been coming back to ground, once White House denied the rumor as false, client gains had been protected, and it had been a super fast one. And kudos to those who had been ready and who had benefited. And since then, what do we see? Zero willingness to break below those lows and those moving averages, be it 50 or 200, quite converging. Actually, these are MAS 9 and 54. These are the periods that I prefer using. What had changed in the bond land? It's looking not so appealing. That's the single adjective to use. US dollar, that had been my key precondition to see it stabilize. It did, and it allowed for stock market retracement and comfortable closure of Sunday's bearish gap, which had been as well an essence of my Saturday's call. I will be linking to both videos, Saturday and yesterday. Thank you for liking them and reviewing them. There is, as always, plenty of alpha, plenty of thoughts to power your own growth and success. So here we go with the US dollar, seeing some kind of a retracement hesitation today, and the ascent not exactly representative of yesterday's wild rise in yields. So this is part of the conundrum in the heightened international situation, where China on Friday responded 34% countermeasures tariff of their own, only to get threatened with 50% tariff yesterday unless they drop their 34%. And Europe had been playing this game smarter while threatening tariffs of their own and imposing a little of face-saving ones, exempting certain alcoholic beverages. So Europe had gone the negotiation route, as did much of the rest of the world, which had been exactly the dynamic that I had described in yesterday's video. So make sure to review those thoughts, and thank you for liking them as much as you do like this video. On Friday I had been clear that, in my humble opinion, this volatility metric or VIX itself have not yet risen nearly enough, and such is the development following yesterday, where it did indeed rise on a quite measured way that I would consider as fitting the circumstances, and gradual, slow, calming day, and what kind of daily candle will we get today on my favorite volatility metric, VIX to short-term VIX. I have an opinion, I will share it with clients. This is how VIX, plain VIX itself, looks on an hourly chart, so all quiet on the Western front here. Let's review the select trading signals calls for precious metals, and I had been adamant that I do not expect any great raging bullish upside from gold, and while it had been gyrating, which was of course as well part of those predictions, it had not been able to start making higher highs. So that is the way gold is looking, and silver in a wait and see mode, well, as well, quite hammered. So much for the select preview of what I do behind the scenes. This is a mere fraction of what clients are getting every day. My join page to help you select what's right for you based on what and how you trade. Go with the combination of daily analytics together with select premium Telegram channels based on your markets of interest.